myself Vaibhav. In today's session of Visual Jforex, we will be starting afresh to work with an indicator named DX, Directional Movement Index. We will see how we can utilize this indicator to design and develop the algorithm on the Visual Jforex platform. So let us head there, which has been developed by the Dukascopy Bank SA. You will find this indicator listed amongst the momentum indicators. Here it is below the CMO. In prior session, we had finished the setup using the CMO. Now this is the time and turn of DX. And if you want to see how this is calculated and its technical aspects in more details, I would recommend that you refer to the earlier introductory video in which I had talked about its technical aspect and how the values are arrived at. Now, in today's session, we are more concerned with the functional aspects of it. So I won't be going into the details of that. Now, let us start with the logical aspect of how we can utilize this indicator. For that, I will briefly explain to you the indicator used on the chart. There is a USD JPY chart. This time around we will work with the USD JPY for a change for last many session. The instrument of choice was Euro USD. So let's change a bit. And this directional movement index is fairly easy to understand. I think I had also done a session on the ADX. ADX stands for average directional movement index. And as you can make out the difference between the two, the ADX is the average value of the DX. So in case of DX, we have a lot more volatility, lot more changes day in, day out. So you can see on the plotting itself, we are seeing a lot of deviation, a lot of change happening in rapid pace in the value of the dx. And in case of adx, it is a lot more smoother as the average directional movement index is plotted after calculating the average value, usually for last 14 candle periods. So that is the difference there. But apart from that, the basic logic is fairly similar. Whenever we have the value about 25, that is indicative of the fact that the trend is picking up, and it doesn't matter whether it is bullish or bearish. On both sides, the trades can be initiated provided the trading is happening on the side of the trend, and for that you will mostly have to rely on other indicator or simply the historical candle to see on which side the trend is. As the dx, the directional movement index, is trend neutral, it only gives us the idea of the strength of the trend but not the direction of the trend. So that's why we have to utilize other technical indicators, or as I said, at least the price action, to see what's happening. And for this session, what we will do, we will simply be looking for the quick change in the dx value. So whenever we have the dx value doubling in last two candle periods, and this time around we will be working with the hourly time frame. So you can simply say that whenever we will have the dx value jumping about 25, and it should be happening in quick succession, that means the the dx value should be more than double in should be doubling more than should be doubling in last 2 hours, and the last hour's output value should be about 25. So that will give us the idea that trend is fairly strong. And as you can observe this time around also, that the USD JPY is sinking and we have this DX value. I'm again saying ADX, but this DX, and the dx value should be jumping up about 25, and at the same time, as you can see on the chart, it has doubled in last 2 hours. So that's the point of entry for us, and we will be looking to initiate the sell trade in such moment as the price action is showing a drop, and we will be utilizing the price action to design the algorithm in such a way that we only trade with the trend, not against the trend. And here, as you can see, that the closing value is below the opening value. That will be a critical marker. And whenever we will have the closing value above the opening value, that will indicate that underlying trend is more bullish, and it is getting stronger. So we can initiate or look to initiate the buy trade. So that's how this indicator based algorithm is going to work. And as I said, these should be doubling, and apart from that, we will also set certain condition that there should be enough of price volatility, and that can be defined using the pip calculation. With calculation expression, certain amount of pips can be set as the predetermined minimum condition. And also last hour's price action can also be taken into consideration. And we can also work it out both ways. Suppose if there has been significant move already, and to avoid trading very on the very top or at the very bottom, you can also set some condition that after predetermined move, if the current move is exceeding the predetermined level, then no trade should be initiated. So that can be done also, and that condition can also be brought in for the safety. So this is the dx value, and we will need a couple of dx blocks and also the historical candle blocks. First, we'll start with the component info logical part first. We will have to first get the instrument subscription done. This time around, we will be working with the on candle, and here candle instrument should match the default instrument. And default instrument, as I said, we will be working with the USD JPY, so I will have to search for USD JPY here. Okay, I got this. And default instrument will also need to be changed to USD JPY. Okay, so far so good. And after that, position info, all position amount, I am going to set it at 0 so that there is no pending open or open position in the market on the account currently. So it will avoid the possibility of multiple trades being open on the account. This I will change to hourly time frame. Look back period will be 1. And after that, one more dx block will be required. And this will have the look back period of 3, shift 3. Okay, so after these blocks have been defined, we will have to turn our attention to the info aspect where get historical candle of hourly time frame and 10-second time frame will help us out, and I will define this two candles for hourly time period. This will need to be changed to hourly. And shift 1 and 3, as we are going to rely on the difference of 2 hours. The lookback period should be 1 and here in this case 3. And then to pinpoint the exact entry point, these two candles will be defined for 10 seconds. Lookback period of 1 and 2 respectively. This case 1 and here 2, and the default period of 10 seconds. Okay, and as I said, we are also going to rely on the price volatility. So what we will do, we will see that there should be good enough price difference between the opening and the closing values of these two candles. So in case of a buy trade, we will be comparing the difference between the opening candle and the closing candle. Here candle 19 is open and candle 18 is closing value, and of course candle 18 close should be higher, and I think minimum price difference of say 15 or 20 pips can also be set in, so as to make sure there has been enough of volatility on the price front also. And while looking for the sale trade initiation, we can set similar condition that the closing value should be lower by more than say 15 pips compared to the opening value of this historical candle of the hourly time frame with the lookback period of 3. So that's how we are going to proceed with this, and for that in today's session at least I will get this one calculation done. And for defining pips, we will need a default instrument pip size, which need to be multiplied with a new new variable, and we will keep it 15 pips. We will make it A1 into A2. Okay, and as I said, to also avoid the possibility where there has been too much of price move, I think we can cap the maximum permissible move, the price difference at around say 40 pips or 45 pips, and if the price difference is more than that, no trade will be initiated. So for that we will take one more calculation expression block, and here also similar calculation will need to be carried out. default instrument pip size will be multiplied with 45 pips. Oops. And this one also be A1 into A2. Okay, so we have defined these two calculation expression block for the minimum and the maximum permissible difference between the opening and the closing value for last two get historical candle block of the shift value 1 and 3 respectively, and we will carry out the further calculation for defining of the buy side as well as for the sell side in coming session. For this session, I will be wrapping up now, and if any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market developments. See you next time. Till then, goodbye.